Hello, everyone. Thanks for joining and welcome back. Our guest today is my good friend David Morgan, the publisher of the Morgan Report and a legend in the silver industry. Welcome back, sir.
Ivan, you don't have to call me sir. Ivan, it's good to be back with you. Thanks.
Yeah, no, it's a huge, huge pleasure having you come down. I wanted to get you down to talk about all the, craziness that's happening in the silver and gold market and the excitement. But first, I wanted to start off with everything that's happening with the tariffs and, the LBMA with the gold vaults just skyrocketing. We'll start there. What are your thoughts on all of that?
Yeah, quite a few. So, as you well know, I have some pretty good sources. And this whole shipment out of the LBMA into New York primarily did revolve around tariffs initially. There's people out there that I respect, admire, that have basically stated otherwise, but that's how it started. So the reason being is that no one was sure of a couple things. One, if the tariffs are really going to be imposed. Secondly, whether they applied. Would they apply to commodities or not? People were thinking that they weren't going to apply to commodities. But rather than guess, the best thing to do would be to ship gold that could be uh, encumbered by a tariff into New York before the deadline, which was the 1st of February 2025. So that was the beginning of it. But what happened along the way is it became apparent after a while that the gold deliveries were not being met in a timely manner. Now, if you buy metal at the spot market, it refers to on the spot. So I walk into the Ivan Precious Metals dealer there in Ontario, and I walk into your shop and I say, I want to buy gold. And you say, well, the spot price is, I don't know what it is, a Canadian dollar, 3,100. I don't know what it is.
It's 4,000 Canadian.
4,000, that's right. It is 4,000. This is the Canadian currency. So it's 4,000 the ounce. And I put down 4,000 Canadian dollars, and you give it to me on the spot. That's really what it means. It means on immediate demand.
Right.
Now, in the futures market, you can take a spot contract and it takes a few days to clear before you get your metal. Well, the problem was that in the spot market, it wasn't being delivered on the spot. It was being delayed. And the more that was purchased, the longer the delays. And so,
Right.
what I believe, and I've verified anecdotally, that people or really entities like hedge funds, well, sovereign wealth funds, dealers were getting concerned about their gold. And a lot of this gold is being what's called repatriated. So if I'm a nation state and I store at the LBMA and I'm finding out through other intermediaries that the gold deliveries are taking 4 to 8 weeks, now I have a reason to get my gold out of there and get it into my own hands. And
Right.
so it's gone from the worry about will I have to pay a tariff to ship the gold to the United States into a I need to repatriate my gold. And so I want to back up and I won't say enlighten, but let me just go back to my history because as you know, and many that follow my work know, I've been at this a long time.
Right.
And if you go back into history, many, many years ago, in the early 2000s, I believe, there's a man named Frank Veneroso. And Frank Veneroso was a well connected government slash large wealth hedge fund manager. And he wrote a book called The Gold Book. I believe he wrote it every year. I have an electronic copy. I might even have a hard copy, I forget. But what he pointed out was that the gold lending program had accelerated to the point where we couldn't really trust these derivatives.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept. and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
So I suggest that everybody that's listening to this program that wants to know what's really going on and what's been going on for a very long time is available for the public. Just type in Frank Veneroso gold outlook and you'll get it. I found it pretty easily.
Okay.
So what happened was gold is sitting in vaults. It's not earning any interest. So the intermediaries, so the central banks, loan the gold to bullion banks. Well, bullion banks aren't going to hold that gold and pay storage fees on it. So what they did was they sent it to the market, bought it, sold it, and got cash for it. And the cash could be used to buy T-bills, for example. So if the gold loan was 1%, which what it was in those early days, so you're buying something for 1%, you're selling it into the market, and now you can take that cash and get 6%. You've got a 5% spread, and that works all day long.
Right.
And they're happy to do it. The only problem you have is a price risk. The price of gold could go up, the price of gold could go down. And you mitigate that price risk by going into the forwards market. So either the futures market, which is regulated, or the forwards market, which is actually bigger, which is the same as the futures market in most aspects, except it's private. And all that is a hedge that I will, buy gold in the future at this price and this amount of gold.
Right.
Which means that if something goes against you, it doesn't really matter because you've hedged the price. So it doesn't matter which way the price of gold goes. So you get your 5% and use some of that 5% to protect yourself with all call insurance, which is what the derivative is.
Right.
And this is taking place. The problem being is what I just outlined earlier, and I'm going to say it again, is that this goes on and on and on and on. And all of a sudden you're at a point where you've really lent out a great deal of gold. All the hedges are not in the physical market. They're in the derivatives market that has a claim on gold, but not necessarily could get it.
Right.
So now that people are taking their claim on gold and saying, give it to me, the market's having a tough time getting it delivered. Now, I'm not suggesting that it isn't all there and that every ounce of the derivatives market isn't accounted for or could be made whole, but my life's work suggests otherwise. And what does that mean? And the answer is no one knows to what level. Is there 10 times as much paper gold out there than there is physical to back it up? Is there a one-to-one? I mean, I have to be fair. Could it be? Yeah, it could. I really, really doubt it.
Me too.
So now you're not in the panic mode. And of course, the mainstream press really kind of overlooks this. And, I listened to another commentator that I greatly respect that did an interview with a guy in London that I also greatly respect. And, the mainstream financial press is kind of making light of it. Well, who cares about gold? Well, the central banks. The central banks care a lot about gold.
Right.
In fact, they care about gold probably as much as anything. Of course, they're not going to say that in the public because that would only, fan the fire that's already started. So my bottom line is this. People are looking for their gold and they're scared it may not be there. That's the bottom line. Now, I don't want to be an extremist. I don't want to be radical. I don't want to go over the top, but that's what it appears to be. So started off as tariffs, morphed into I need my gold, into basically a repatriation of gold. Now, where does it apply in the silver market? I think it applies in the silver market, but not to the level that it does in the gold market as far as the need for gold, because silver is not a monetary asset. Central banks don't hold silver.
Absolutely.
So if central banks looked at silver the same way they look at gold as a tier one asset, the money of last resort, we'd probably see the silver market really flying because the silver market's more leveraged than the gold market in my studied view. But since silver is primarily an industrial commodity, and most of the believers in silver from a monetary aspect are retail investors, not institutional investors. Yes, there's some institutional investors, but they were primarily through the ETFs, which are held by bullion banks anyway. So I think you can read between the lines there that there may be more leeway, perhaps, in the silver market at this time
Right.
than there would be in the gold market, because, as I just said, gold is money to central banks, whether they admit it or not. So that's the bottom line. There's basically been a run on the bank, or a run to gold, or a run, or a bank run on gold, or a gold run, whatever you want to call it. I think it could spill over. I'm pretty sure it will spill over to silver. And the next delivery month for silver is March. So we have kind of a breather here. You can, again, take delivery from an exchange, any of them, on the spot market. But normally it's the delivery months where you're really geared up to take delivery, and that's March for silver. And so I'm just kind of waiting and watching.
Right.
Now, what I've stated, could I be inaccurate? In the general picture, no. In the short run, perhaps. In other words, there may be enough physical out there on both sides, physical silver, physical gold, to mitigate the problem and kind of, well, let's say, for want of a better expression, make it go away. But I doubt it. I think that once the genie's out of the bottle, it's hard to put him back in. And I think that's happened in the gold market. And again, it's going to appear. Now, what does this mean? And that remains to be determined. I mean, it could be where the authorities do what they've done in the past, where we had a run on palladium, for example.
Yeah.
The exchange came in and basically they stopped the whole market. They stopped the derivatives market, and they just put a big stop sign up. I'm not joking. And they said, we will determine, we, the exchange, will determine what leases are going to be made whole or made. Well, we're going to determine how this problem is mitigated.
What are the possibilities for that in the gold market? Do you think that will happen, like what happened to the palladium market?
I don't think it will to the degree that it did in palladium, because that was such a small market. There's really only one buyer
Right.
for physical. So that was pretty easy to stop. So like, hey, Mr. Buyer, we're the exchange and we're going to tell you when you get it. You'll get it, but you're not going to get it as you bought it. We're going to
Right.
tell you when you get it. But with one buyer, primarily, that's pretty easy. But when you got a bunch of banks and nation states saying, hey, I'm this country, I'm that country, I'm this other country, you got
I
three or
want
four
my
countries
gold.
saying, I want my gold back. You
Yeah.
got a bigger, much, much bigger problem. So my thought at this time, Ivan, is no. I think it could escalate. Now, that doesn't mean that the powers that be calm down these nation states and say, quit your whining, shut up. We've got to get this thing under control. And we're all going to line up and march to the same tune. And here's the tune that we're marching to. That's what I expect to take place.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking.
But I think you can read between the lines that just because you get a happy face out there and some authority figure that tells you, guys like me are full of it and we don't know what the hell we're talking about, is only a facade, a thin veneer of the reality of what I just outlined. But I wouldn't be surprised if you get some, central banker that says, oh, this is a bunch of hooey. We've all got to get the gold, blah, 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 blah. We'll see.
Absolutely. Yeah, absolutely, David. It's quite an interesting thing to see in this market because, you know, a lot of people are just looking so closely right now at the gold and silver market and saying like, what the heck is going on? Do you think this trend will continue? What's happening with the gold and what's happening with the LBMA? Do you think that trend will continue or will it, sort of die down?
Well, I've learned from a lot of people, and certainly I've never said I'm a know-it-all. In fact, I've always said I want to be learn-it-all, and no one can learn it all. But
Right.
the late, great Jim Dines taught me years ago that a trend in motion continues until it actually stops. So I
Mm,
just answered your question. The trend has begun, and it hasn't ended yet. So I think it will continue. And that's why the last question is so important. If I'm right, and I believe I am, then someone's going to have to stand up, or someone's, and they're going to have to make a statement and make it brief, perhaps vague, and mitigate the problem. At least get ahead of the narrative that, all these, the typical speculators, these tinfoil hat guys, the silver stackers, those guys, those gals, they're at it again. they're at it again, and blah 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 blah, and they'll do their best to capture the narrative, put it all to bed, make it go away. But the reality is the trend will continue, and the more that they really deny it, the more the trend could accelerate. Because if you're a nation state and you've got all of your gold at the LBMA and they're telling you 8 weeks, are you going to believe them?
No.
I mean, you might say, well, the 8 weeks go by, and it's 8 more weeks or whatever. So there could be a scramble. What's interesting is this is basically on the institutional banking level, and retail really hasn't caught on. And I thought about that before our call or interview. And my best guess on this is that, $4,000 gold is a pretty hefty number for Canadians and almost 3,000 US. I mean, there are a lot of people out there with savings that are going to say, you know what, I need to buy gold. It's 3,000, it's 2,900, round numbers.
Right.
That's a lot of loot for one small gold coin.
Absolutely.
And so I think, and this again, think that perhaps the retail market has been mitigated not by the need for gold or the understanding of gold, but the price of gold. I've always said for years, and I think we've talked about this in one of the earlier interviews, that, I've said two things. One, that gold would get so high a price that the average person can't afford it, so they'll move to silver because it's cheaper. And that's where I think we could be.
Yeah, absolutely.
People that are in early or bought gold at all the way up to say 2,500 are like, you know what, I'm holding it, but I don't need to buy. And the people that might want to buy, they're saying, you know what, I've got, $7,000 in my checking account. That's all I've got available. I need to keep some buffer in cash. And do I really want to go down to the coin dealer and put down $4,000 and keep 3 in my bank account and buy a gold coin? I don't know. So that's my guess, but I think that's the reason for the retail market isn't out of neglect of intellectual concern over the financial system getting further stresses. I think it's just a price factor.
Yeah, you absolutely nailed it, David. And that's one thing that you're looking at, like $4,000 gold for Canadians, and especially what's happening with the economy and what's happening with this, the tariff war and the trade war now. Absolutely, people are for sure going to hold on to whatever they can to pay bills. I think for sure these bigger central bankers and these sovereign states are going to be looking at the LBMA and be like, hey, I want my gold
Yeah.
sooner or later. So yeah, you absolutely nailed it there. But David, before you go, I'd absolutely love for you to share your social medias. Where can people connect with you? I'll put the links in the description below, but where can people connect with you?
Yeah, the best place really to get my kind of daily thinking, if you will, is on my Twitter account. And that's at Silver Guru 22. So just the @ Silver Guru GURU 22. That's the most active. I'm not shadow banned there. Everywhere else I am. I have a YouTube channel, The Morgan Report. I have a LinkedIn presence. And then if you'd be so kind as to put in the documentary, I just talked to the producer a couple days ago, and the film's getting edited. And that's at silversunrise.tv. And if you could ask some of your followers to go to silversunrise.tv and find a trailer that they like and post it on their social media, it would really help me. We're still looking for some donations. So people that are, for the cause, might make a donation that would certainly help out. So it's silversunrise.tv. Take a look at some of the trailers. And if you like one or two of them, please go ahead and, forward the message to somebody on your social media.
Yeah, no, thank you so much, David. Everyone watching, I highly recommend you silversunrise.tv, and please go follow the Morgan Report, follow David on his socials. I'll put the links in the description below. But David, again, as always, it's a huge pleasure you coming down, and I'd love to have you back on in the near future.
Well, thank you for having me. And again, go to Frank Veneroso, the Gold Book, or Thoughts on Gold, and have a nice read. And pretty much can back up everything that we just talked about.
Yeah, no, a huge pleasure. Well, everyone watching, again, please, I highly recommend you go follow David. And then everyone who wants to see anything, please, I'll put the links in the description below. But David, again, huge pleasure for you coming down.
Thanks for having me.
Talk to you soon.